I don't need to tell you that the market is quite active right now, but this week the VIX exceeded 65, which is the fourth largest indicator of market volatility in the last 40 to 50 years, and I've been around for all of them. After '08 to '09, the 8 and telecom bubble in 2000, and 1987, it is now the fourth. What does this volatility alert signify now? It typically indicates that something is changing and that the market is either experiencing or has already had a cathartic moment. And as you are aware, ever since the Fed began raising interest rates, we have been convinced that the U.S. economy, and perhaps the world economy as well, has been experiencing a rolling recession. The other trend that was evidently occurring at the time was a rise in the carry trade, which involved borrowing yen, shorting yen, and purchasing dollars to invest in assets that yielded higher returns than those in Japan, so playing the spread. Shorting the yen meant that the investor or speculator was profiting from the yen's decline, which is another reason this became a very common trade. That changed drastically this week, though, as the Bank of Japan raised interest rates more than most people anticipated and appeared more committed to doing so. The VIX has reportedly eased down after a sell-off in many assets and numerous margin calls. We do not yet know if the carry trade has fully unwound. We're halfway there, according to JP Morgan, so maybe there will be more turbulence. However, I do think that the Fed is currently on high alert since the stock market appears to be pushing the Fed to keep rates high for longer and ensure that inflation is eliminated. We've also been stating for a while that inflation is ending far more quickly than the usual indexes currently show. Although the CPI is at 3.1, prices are declining by other measures, and if consumer confidence declines, we wouldn't be shocked to see a slightly wider decline in prices. Why will the consumer weaken or keep weakening now? We think it's because companies are losing their ability to set prices, and they will be laying off employees and speeding up efforts to boost efficiency in order to preserve margins. As a result, the unemployment rate will increase. As we listen to Chairman Powell, it is undoubtedly causing the Fed to shift its stance, and I believe that the stock market's decline is hurting household net worth, which is another reason why the Fed will give in. As a last point, declining interest rates should be very good for the stock markets, but they won't stop a recession anytime soon. In fact, what will firms and consumers do if they are aware that interest rates and possibly prices are going down? They are going to wait, since the market, in its wisdom, already knows a lot of what I've told you. We do believe that lower interest rates, once this carry trade is fully unwound, will be the decisive element in the market's shift from a highly concentrated group of stocks to a much more diverse group of stocks. Furthermore, we think that as AI spreads throughout the global economy, productivity improvements will undoubtedly occur because, as I just indicated, innovation solves problems. Because we have many years of expertise and have gone through these cathartic periods of instability, we just wanted to share some insights with you. It typically indicates that a shift to a different way of thinking is taking place, and we do anticipate it will continue throughout the remainder of this year. The Magnificent Seven's three worst-performing companies, NVIDIA, Tesla, and Amazon, have all had declines of between 11% and 13.3% during the past 3 trading days. Since the commencement of the most recent selling fight last Thursday, only Meta has been positive. Come learn what he's keeping an eye on in the tech industry. Ray Wang, Principal Analyst at Constellation Research. It's lovely to see you again, and good morning. On the downside, Ray, would you purchase everything or nothing? In order to determine whether we were truly in full panic mode or if we would actually recover, I was going to wait to see what was happening with a few other data points. It was encouraging to see in the morning that, we had a pullback and that people were genuinely waking up and realizing that, one data point wasn't going to cause everyone to overcorrect. However, this is a good moment to investigate this, and I believe that some stocks are genuinely doing well in the AI space, NVIDIA, of course, continuing to be present. We will have to wait until August 28th to find out how they plan to, what their Q3 forecasts will be. More significantly, though, they will still be among the winners. You brought up Amazon. Long term, that one will be interesting to watch because I would be concerned about Amazon if the retail industry did decline and consumer spending did decline. However, we are witnessing some intriguing things. AI is generating revenue. For instance, Uber stated yesterday that algorithmic advancements, better ride batching, and better price matching have all increased their profitability. Naturally, Meta has done a tremendous job with their open models, as they are able to open source their LLM while also obtaining further data to demonstrate their exponential efficiency and precise targeting for ad growth. In that sense, Meta is a fantastic stock, and NVIDIA is undoubtedly an excellent one based on what you said. Ray, do you simply disregard it when we have times like this, when perhaps it's based on a carry trade or currency fluctuations? Do you worry that, well, a multiple is sort of rich in that, well, everything could be marked down depending on what happens in the macro world, or do you just concentrate on what you know about each company separately? How is it done? What are you searching for? Simply seek for chances to get long on something you enjoy. Right now, it's all about finding ways to profit from the AI revolution and identifying which businesses will benefit from it. As a basic illustration, Adobe is profiting from the sale of AI software. We will observe Microsoft's performance in terms of the programs they sell. Oracle has performed admirably in that regard. One business that has experience with AI is Palantir. The space has been occupied by C3, and our goal is to determine who has the most revenue increase, correct? The projection of what that puts out there is always what matters. Although it concerns individual equities, the macro was a greater problem. Indeed, the concept of debt that was previously articulated is accurate. China is facing significant challenges, and that's a market. With slower population growth and the debt bubble, they'll be in a difficult situation. In fact, they will resemble Japan in 20 years, and Japan was destroyed due to MMT's failure. Therefore, a single data item, such as the number of jobs in the United States, isn't going to bring down the American market, but yesterday's sentiment was really negative. I must interrupt with a recent incident that is incredibly entertaining. In China, McDonald's asks whether you would want an NVIDIA keychain with your McFlurry order. The issue is that their NVIDIA keychain is already sold out, even though it only costs $20. In the retail market, it costs hundreds of dollars. This is because they only made it available to less than 10,000 buyers. Elon said, "In that case, I will definitely have some," after stating that he was unaware that this was taking place. Just so you know, if you want to purchase this NVIDIA keychain, click the first link in the description. Although I'm not sure if this is a joint venture, both McDonald's and NVIDIA have posted about it in China. In any case, this product could sell for thousands of dollars in the coming years. We don't have many opportunities to purchase rare treasures like these. Anyway, we only have 100 pieces left, so hurry and click the link in the description.